Hey everybody, and welcome to the weekend edition of the Daily Market Commentary. Hope everybody had a great trading day, a great trading week. I am your host, Chuck Fulkerson. We're going to do what we do on the Daily Market Commentary every day. We look at the same 10 to 12 futures markets to see where these markets may be going. For those of you that only watch the weekend edition, we tend to look at a slightly bigger time frame on our weekend edition of the Daily Market Commentary to kind of outlook what may happen in the coming week. We're going to look at it from primarily a technical perspective, but there is some fundamental stuff that we may want to talk about today, especially around volatility. And I want to talk about volatility a little bit because we're at our brand new all-time high in the S&P. So the S&P on Friday, as you can see. Now, by the way, these lines on here, we leave these lines on the chart. So everything on here is the stuff that we had on from our prior commentary. And we can see that we got a brand new all-time high in the S&P. The markets just have continued to rally higher. It's kind of a relentless move up. There's really not been any pullbacks to speak of for quite a while, really. We had a little bit of a pullback on New Year's Eve. We had a little bit of a pullback, I guess it would be just about the week before that. I guess it wasn't New Year's Eve. It was the last trading day of the year. But anyway, we've had a few small pullbacks, as you can see on the hourly chart. But when we look at this on a daily, really no pullbacks to speak of. Matter of fact, we've only had 1, 2, 3, 4, 5, 6, 7 down days since the beginning of December. So really just been nothing but straight up and rallied up, last week pretty aggressively to kick off the new year. Now, I will say, every analyst, everybody I've been speaking to has been talking about a bullish 2018 and how bullish 2018 should be. And with that being said, I'm always still going to be cautious and I'm going to maintain my bullish stance. There's no shorts that we're going to look at up in this range. To me, this is my best long opportunity right in here. If you want to go to a bit smaller time frame because you think it may not get down into that area, you might have a little opportunity right through here. Now, remember, we use purple lines designate small time frame opportunities. Green lines represent bigger time frame opportunities. So anytime we're dealing with a smaller time frame opportunity, we've got a smaller degree of probability. So this is going to be a slightly less probable area. The other thing is that I feel like we're a little overextended, so I'd want to see price come into here and then get, I put a dashed line when we want to see price come in, and then we get long as it comes back out. So as far as the S&P, this is the kind of the area where I might be interested. Now, the reason for that is because we had a little bit of a breakout, if you will, right? Look at this kind of breakout here, a little bit of a breakout, and then this would be the retest of that breakout area. And retests of breakout areas typically tend to be pretty good and pretty solid trading opportunities when we're using some of these chart patterns that have been around for quite a while that still have a lot of validity to them. As far as the Nasdaq goes, so in the Nasdaq we've got another area down on the hourly chart. Above this strong rally up in price. There's really nothing on the 15-minute chart that I like on the Nasdaq quite as much as I liked on the S&P level. And the reason for that is because I don't have that same breakout pattern. You certainly could use this area here, but I really like that breakout pattern that the S&P provides as a slightly higher degree of probability. It's just an additional level of confirmation, if you will, for a potential reversal trade if price comes in. So as far as the Nasdaq goes, this thing once again continuing to go higher. No shorts here to speak of. As far as our big picture weekly charts, it's continuing to just march higher. Nothing really to see here. Let's go to crude oil. Now, crude oil, we did get a pullback into the area that we had talked about last week. I had put on Twitter that if you didn't like the arrival here, which I wasn't a huge fan of the arrival, I'd be perfectly okay with somebody taking and cutting this level in half, if you will, and just taking this lower half. In that case, you would not have gotten filled. If you took the whole area, then you've gotten filled on the trade and it's starting to move your direction. So, yeehaw, that's moving your way if you were able to catch that one and ride it up. I didn't like the arrival personally, simply because, I look for my opposing fair price area, and if my opposing fair price area is here, then I'm essentially looking at a 1-to-1 reward to risk. And sure, it has moved that way at this point, but it's up to you really if you were going to change your rules and shrink this level a little bit. And I put on Twitter that a lot of you may want to do that. It depends on your risk tolerances. Looking at gold. So gold, we had a very long running candle-to-candle trade, and that one finally came to an end on this lower low on this day right here. It's still continuing to march higher. I think that gold is still a good value. When you look at gold valuations to other movements that we've seen in the S&P and in things like Bitcoin and in some currencies, gold could still be underpriced. Go into a monthly chart of gold, a big picture chart of gold. I don't think it's inconceivable that we could see gold get to up above, get above 1,400 up into this 1,592, even 1,600 range. Now, the reason I'm looking at that is because as the markets continue to go higher, when people do start to go to a risk-off position, gold may be a place that they go. The other thing is that as everything else has continued to run up for the last, 4, 5, 6 years, look at what gold has done since 2010. It's really kind of come down. It's been counter to everything else. It's been an unpopular investment vehicle, which means maybe there's a little bit of undervalue in there. Now, there's some argument to say that the reason that it rallied up this high was because gold was a safe haven when the market was falling apart in 2007, 2008, and people went to gold. There's also the possibility that gold, from a fundamental standpoint, was being heavily used in a lot of the technology sector stocks as an actual raw material to be used, and so that reduced the overall supply and increased the overall demand, which helped rise the price. So at this point, I think that there's still a chance for gold to go higher from a big picture fundamental standpoint, and it may be something that you look at for your portfolio long term. Looking at our bond markets, so in the bond markets we have really continue just sideways price action. We saw the bonds spike up on Friday's economic announcements and then come right back down. That spike up, for those of you that were able to catch that short, was a nice run out of that area. I think we could be getting a decent little breakout to the downside here. If I look at this on a daily chart, I could see this as a potential breakout to the downside, at least to this range right in here, to this 123 area. So if I go this back to the hourly, there's a legitimate argument to say that we could get a breakdown below here. So keep that in mind. If you are comfortable trading the breakouts, I think there's room for this to run down to about the 123 area right here. So just keep that one as a potential trade on a short on a breakdown. Remember, breakdowns, we need room to run. We need an area that's been tested a number of times. There's rules for a quality breakdown trade. The Aussie, speaking of breakdown, here was a breakup. Now, this breakup was a breakout trade to the upside. It's continuing to run. It's hit our first profit objective, and we've got a potential reversal right up in here. So we're just going to let this thing kind of continue to go. Hope some of you are still in this Aussie position as it is playing out. The Euro trade, the Euro has not come back to our potential reversal. We're going to leave this one in play as is. A little bit of dollar strength coming out of the weekend could drop us down into here for a potential reversal. Now, my only fear on this hourly reversal is that we've got a really nice daily reversal below it. So if that hourly reversal gets blown through, the daily reversal that's below it, which is really this whole area in here, might still be an effective opportunity. So just if that hourly level gets blown through, don't give up on it. You still may be able to catch a candle-to-candle reversal pattern from there. So just something to consider. If your hourly level gets traded through, then possibly you could use this as a reversal point this area right in here, use this as a reversal point, and when price comes into here, then start a candle-to-candle trade, moving your stop up below each day's prior swing low. For those of you that aren't familiar with the candle-to-candle trade, just go into my YouTube channel. I think there should be another live video on candle-to-candle trading that I did a while back. It was a YouTube live, and you can go and watch it. Canadian dollar, still waiting for some of these areas to possibly meet entry. Strong spike up on Friday. This could create a potential for price on a reversal back into this region here. Last, but certainly not least, we're going to look at the British pound, the Japanese yen. British pound, we had a breakout of the descending triangle pattern. It's continuing its little march higher, but really nothing to speak of at this point. Could be another breakout long above this area here. Simply because we had a little bit of basing there. It touched it once, it touched it twice, a breakout above here. My fear is there's not enough room to roam. And then the Japanese yen, we're still just chopping along between two potential reversal trades. So with that being said, I'm gonna turn this thing off. Actually, you know what? There's one more thing I do want to look at before we go, and it is Bitcoin. So I want to pull up Bitcoin real quick. Because I've had a lot of emails about it and a lot of people asking specifically about Bitcoin. So if I look at Bitcoin on the hourly chart, let me first look on the daily chart. Looking at Bitcoin on the daily chart, you don't see a whole lot of things here that are really tradable. On the hourly chart, there's definitely a potential reversal right at this point here. But I really like this area up here. Now, I'm not a huge fan of shorting Bitcoin, but for those of you that are looking at it, it's worth looking at as a potential. I do like a potential for a short right in there, depending on our arrival into that area. You also could get a long on a pullback into this area here. So now, mind you, that's a humongous space, and you've got to make sure that you're playing Bitcoin the right way and with the right vehicles that fit your risk tolerance. It's something completely different that most people don't have a lot of experience with. But there's places out there that we can learn a bit more of, and I'm working on getting some education around it so that I can hopefully help you guys on if you've got questions on it, and we can be there for you. So with that being said, I'm going to turn this thing off. I hope everybody had a great trading week. Remember to fiercely protect your capital, and I will see you soon.